And welcome back to another episode of Fashion and Finance with your hosts, a diva and a nerd. What's up, Mr. Nerd? How you doing today?
Roll the dough. Roll the dough, baby.
All right. For those who are subscribed, thank you so much. We do appreciate you tuning in, watching, liking, and commenting. And if this is your first time joining us, we ask that you please consider liking, commenting, and subscribing so that we can bring you more tidbits of information as it pertains to the fashion industry, fashion trends that are coming up for the year, as well as financial tips. Now, of course, we are not financial advisors or credit advisors. However, Mr. Nerd and I would love to share with you, based off of our own financial experiences, tips and tricks that may help you, because we're trying to do what, Mr. Nerd? We're trying to put
roll money in your pocket. And money in your pocket. Money in your pockets.
Without further ado, let's get into it, shall we?
Let's go.
So today I'd like to share two lists. You know, there are YouTube channels and there are shows and there are podcasts that tend to go over the top 10, top 20, top 30 lists of this or that. Well, we're trying to condense the information and we'll share just tidbits here and there. So I've got two really short lists for everyone. My first short list concerning fashion faux pas.
Fashion faux pas? What is that?
You know, kind of like fashion style mistakes.
Things you don't do.
Yeah, I like to focus on the positives and I'd prefer to talk about the things that we do want to do and the things we do want to see. But we all know that there are some that might need a little bit of help. So here we go with some fashion faux pas.
Okay, all right.
All right. Number one, buying every piece in every color, meaning if you go to Nordstrom's and you see that blazer and it's available in all of the spring colors and you decide, I want it in green, I want it in red, blue, light blue, it's too much. It's too much. I am making this the number one fashion faux pas because I've been guilty of it. There have been times in the past that I would go to, I don't know, say Old Navy and clean house because of an excellent sale and decide, oh, I love this piece. This can easily become a staple in my wardrobe. And then I decide to get one in pink, purple, blue, yellow, orange, thinking I've got all bases covered just in case I wanted to create an outfit with it. This is the problem though. How often do we really wear each and every one of those colors? We tend to find that it's unnecessary to buy a beautiful garment or what we feel is going to be a staple in every color. Pick one, maybe make three your max, and then keep it moving on to the next piece. It is much better to buy one solid piece versus buying the same garment in every color of the rainbow. Okay, so that's fashion faux pas number one. Fashion faux pas number two, not washing your brand new garment after buying it or not washing it before you wear it for the first time. Mr. Nerd, do you have any idea why I say that we should all wash our brand new garments before we wear it for the first time?
Yes, because being that your garments come from a manufacturer, probably the garment was made in a sweatshop. So you don't know what was inside of that sweatshop. So you don't know. So you have to wash to make sure that you get rid of all the sweats and all the, you don't know who tried it on. Okay, you know, because sometimes in clothing stores, other people try things on. And with COVID, I think it's very important. That's a very, you know what, that's a very important one.
Yeah.
That is probably, that should be number one.
Well, I'm glad that you agree. I'm glad that you agree.
Especially on COVID, because if somebody else tried it on and then you go and get it and try it on, you may have problems there.
For those who tend to be prone to allergies, I'm sure that many dermatologists and immunologists out there would agree that because of all of the manufacturing chemicals that are still present on new clothes, especially if we're talking about garments that were made in China, not to pick on China, but just saying that formaldehyde tends to be on garments that are being shipped long distance, and it's used as part of the textile manufacturing process to ensure that it's starched and there are no wrinkles and it prevents mildew while in transit. And so we definitely don't want those type of toxic chemicals and carcinogens resting on our skin. So that's fashion faux pas number 2. Folks will tend to buy a brand new pair of whatever, jeans, sweater, t-shirt, and just throw it on. Ew. But anyways, okay, fashion faux pas number 3. Please stop buying the overly branded t-shirts. They have no shape, and you are providing free advertising for fashion houses. I just want to put that out there.
I think, Diva, I think that's a little picky.
No, it's not.
My opinion.
Correct. And you keep it right there. That's your opinion. So I'm going to say that it is a fashion. It is what it is. It's a fashion faux pas. Now, people are still going to do what they want to do. Yes. But for those who want to be fashion forward, for those who are ready to get their grown man or grown woman style on, okay, it's time to let go of the over branding. It's time to let go of free advertising. Instead, let's put money as a form of investing into solid pieces that you know can complement your style, that can be a staple part of your wardrobe, because those that have Gucci emblazoned in big letters and loud Tommy Hilfiger, let's leave that for Gen Z. Okay.
But Diva, sometimes Diva, sometimes people buy stuff and they buy a brand, and sometimes the brand make them feel good. It makes them feel like that they are somebody. So what about that? Okay, people buy clothes and they buy a brand, and sometimes if a brand, let's say Gucci, and for someone who's may not be living at the Gucci level, but that having that item gives them a sense of what? Of being. What about that? Now, is it acceptable?
It's a false sense of being, but if that's what people want to do, then that's what they want to do. I'm speaking to those who want to be elevated. That's simply it. Okay, so let's move on to the next list because we don't have a lot of time. And so I want to get through this one really quickly. Our second list speaks to the current trends of this year. We've got 3 trends that we want to talk about here. The first one being baggy or relaxed jeans. This means, ladies and gentlemen, that skinny jeans, unfortunately, are headed out the door. But because fashion is cyclical, it doesn't mean that you need to toss them out or send them to Goodwill. It just means, start perhaps moving them closer to the back of the closet. You can still put them in rotation. However, and I see you shaking your head, but again, I'm speaking to the fashion trends. I make no apologies for the fact that you may not agree with the fashion trends, but the rest of the fashion industry says that baggy and balloon and relaxed jeans are what are trending for this year. Okay. All right, so we've got a couple of examples here.
Do you have a male example?
I do, right here.
Okay, that's a male?
This one right here to the right.
To the right, okay. Yeah. Now. Okay.
Out of everything that we're displaying, this is perhaps my favorite look.
The one right there?
Yes.
Okay. I like it with the shoes. The shoes are nice. I like the shoes.
Oh, for me, this
blazer,
definitely
blazer.
For me, this is definitely a throwback to what I was comfortable doing, what I used to do.
I like that. That's nice.
Years ago. Okay.
That's a good look. That almost look like the bell bottoms there. The bottoms look kind of wide there.
Yeah.
So are the bell bottoms coming back?
Not necessarily part of a trend for this year, but just baggy, relaxed, comfortable, and balloon jeans. Okay. Chunky combat boots. I'm scratching my head on this one just a tad bit because I love the look of combat boots, but the idea of the trend is chunky, which means platform and a little thicker. I'm not quite sure how I feel about that. I do love the idea that it adds inches and can make me look a bit taller. This look is fine. Personally, I don't want anything to make my feet look even bigger. Now,
that will make your feet look bigger.
I do enjoy this look of the slim jeans with a military green jacket. And see, these are lower combat boots, and I can appreciate that. Love that look.
I like the lower. The lower is better.
It looks better. Aesthetically, it's more pleasing, in my opinion, although the fashion trend is chunky combat boots. And then you have one in an ivory color here. Okay. The next current trend is pastel colors. I'm so happy for
Wow.
this. Love it. So we only have time to go over 3 of the colors. This one would be a lilac or a lavender, really any shade of purple or any hue within the purple family. But look at how lovely the shades of lilac and lavender. Now, as far as pastels being on trend for this year, it's because of the feeling that it helps people to evoke. It's part of the optimistic palette of colors. Coming out of COVID, coming out of the pandemic, we all want to feel good, and dressing up to feel good in colors that are bright, sunny, cheery, and optimistic is definitely on trend.
Bright colors make you feel good. It brightens you up.
Okay, so bubblegum pink is very much on trend. I don't even want to say that it's making a comeback because it's never gone anywhere. Pink is my favorite color, as you can see, as you can tell. And this first shot shows the very soft muted pink, pastel pink, and the top is more of a magenta, which is the very next color that I want to head into. Oh, so this is my all-time favorite. Magenta. Magenta is more of a reddish purple or a purplish red color. Look at it. All of it. Take it in. I love it.
I like that.
Oh my goodness. I just want to jump through the screen. So delicious. Let's see, what do we have next? And turquoise or aqua. Robin's egg blue. Pops of aqua here, here. And I think I have one more. There we go.
Lavender and the aqua are trending colors. We're selling a lot of those colors in the store.
All right, there you have it. Those are your 3 current trends for 2021. All right, what do you have, Mr. Nerd?
Nerd's 2 cent worth. Let's get into it. On the last show, we're still watching AMC, and I wanted to show you one thing about the stocks. A lot of times, I was expecting AMC to go straight up, but sometimes we have to watch the short interest. Okay, I want to share my screen. I'm going to show you exactly what be going on the short interest.
The question that I have is, what is short interest? What are we talking about here?
Short interest is when a lot of times big companies, they come in and they short stock. So what they do is they're buy a put. They're buy a put to say, hey, we want the stock to go down, right? And so I'm buying the stock outright. I want the stock to go up. Big companies come in and they say, well, we want it to go down. So they will buy a put on it. And buying a put, that means that they are shorting on the stock. All right. If you can see on my screen, if you look down here, you see this short interest here. And it says, as of June the 15th, there's 17% of people are shorting this stock. That means that they are expecting this stock to go down, okay? If you go back a couple of months when GameStop did its big run, the big boys was shorting GameStop, and they put a lot of money, billions of dollars, shorting GameStop. But the Reddit people pushed the stock up. So the big boys lost a lot of money because they were shorting it, and it went up. So as you buy stock, I want you to look at the short interest of the stock. I'm going to show you another stock, Visa, and see this stock is 17% being shorted. So I'm going to show you another stock, Visa, and I'm going to show you the difference of the short interest of this other stock. All right, Visa. Now look at the short interest of Visa. The short interest is 1.58%. That means that they know this stock is not going to go down. And this is the interest of short. It's very little. And you see the difference? Whereas a stock is not very popular, and there's no short interest of it. It's 1.58%, whereas AMC was like 17%. And there's another one, SNDL, my marijuana recommended stock. It is 58% on the short interest. So that means that no matter what, the stock is not going to go up because they're shorting it. So we have to watch that. I want you to watch that short interest of stocks that you're buying. It's very important because a lot of people do not know about the short interest. And you could be pumping money, buying the stock, trying to make it go up, but somebody else is thinking, hey, we're going to short this and you will lose money.
Mr. Nerd, I need you to put it in English. I need you to break it down in layman's terms. When we talk about short interest and looking at that percentage, essentially what we're saying, or what you're saying, is that folks would want to find that number to be as small as possible. In the case of CM Visa, 1.58% short interest means that it's a pretty healthy stock because there is a small percentage of people that are betting against it to be successful, betting against it to go up. Is that what you're trying to say?
Yes, exactly. That is it.
Yep.
Very
Okay.
short. 1% or barely 2%. It's not even 2%. It's very low. Whereas other stock, I'm sure you know another example. This other example is one of my recommended stocks, SNDL, which the last time I looked, it was being shorted at 58%. Look at this, 59.55%. This stock is being shorted. Will the stock ever go up? Probably not. Okay.
Question.
Yes.
Why would you recommend this then?
It seems that it changed over the last month or so. At one time, it wasn't 58%. Okay. And then recently, I just looked at it to say, hey, as of 6/15, the short interest went up because it had some movement. It was beginning to move. And then the big boys thought, hey, people are going to get into it to try to make it go up. So they came back and put more money on it to go down. So now I have to tell my viewers that, hey, be careful because now I might pull this off of my recommendation list because 60% is really hard to go against.
Okay.
Also, I want to say that I am not a financial advisor. I'm not licensed. These are my own experience, okay? So make sure you talk to your own advisor and just watch it, okay? Watch it, okay?
There are many people that have no idea what a put is. And so if you can put that in layman's terms, essentially, what is a put?
A put is an option. It's an option. And we're going to be talking about options in one of the future episodes. There's a call and there's a put. A call is I'm betting that this stock is going to go up, right? I'm betting it's going to calls up, and a put, I'm betting it's going down. I'm betting against it. I think that the earnings are bad. I think the stock is terrible. So I'm going to put my money on, I want it to sink. In the short interest, it shows how much this stock is being pushed down, 60%. So what are the chances of this stock going up? Very little, 40%, right? 60 is higher than 40. So matter of fact, I'm going to pull this off my recommendation list because it has too much to fight against for it to go anywhere. Nerd pulling SNDL off his list because it's a 60% put.
There you have it. Mr. Nerd's 2 cents for the day. Let's forecast what's coming up for the rest of the show today. In Fashion and Finance, we have a guest who's joining us to speak a bit more about helping to close the wealth gap. Am I right?
Yes, ma'am. There's 6 items on closing the wealth gap. One is business, one is investment, real estate, which we had Terrell Sneed to come and talk about real estate, and insurance is one of the items. And we have a gentleman coming over to help explain the insurance. What type of insurance, how much to buy, how much you need, okay?
All right, so our special guest coming up to help educate everyone so that we can make informed decisions about life insurance. I'm definitely tuning into this because I'd love to learn a bit more. But first, a quick word. Hey ladies, when I'm dressing my man, I take him to Al's Fashions, located at the Short Pump Town Center. And I let Al find the right outfit for the right occasion.
Thanks, Diva. That's right, Al's Fashion, the place with style hits districts, located at the Short Pump Town Center. Come check out Al's Fashion's new Flex tees. And don't forget the shorts and shoes to match. And every man needs the perfect shirt. We got Versace style, linen shirts, dress shirts. And while you're there, check out Al's Fashion's new Steve Harvey suits. And every man needs a straw hat. And we carry all your two-piece walking suits in all styles and colors. And we go up to 6X.
All right, Diva, coming up. First of all, I want you to make sure you like, subscribe, and comment. We want your comments about anything you have. Please send a comment. If you have a question, make sure you send us your question and we can answer it on the next episode. But coming up, with no further ado, we have Mr. Paul DeBerry. DeBerry, come on down, Mr. DeBerry.
Hello, everybody. How y'all doing?
There.
We're so happy to have you here.
Thank you.
Diva, Mr. Paul DeBerry.
Nice to meet you, Diva.
Welcome to Fashion and Finance.
Thank you. I appreciate it.
All right, so you're here to help educate all of us, myself included, about the benefits of life insurance, right?
Absolutely. Absolutely.
Okay, let's get into it. Mr. Nerd, kick us off.
All right, first question. What is the purpose of life insurance?
Mr. Nerd, that's a great question. This is a question I come across pretty often, and I'm trying to change people's perspective around life insurance, because the first thing most people think about is, bury me. That's the first thing that most people think about when it comes to life insurance. And so, of course, we definitely want to take care of burial expenses, but the main purpose for life insurance really is to leave something behind for your loved ones. And what I mean is, you take an example, and this is my favorite example that I like to use when it comes to life insurance. You got a married couple, so you got a husband and you got a wife. Let's say they both make $40,000 a year, right? So that household is used to living off of $80,000 a year. So now if the husband passes away unexpectedly, that household is used to living off of $80,000 a year. But what's happening is they only bringing in $40,000 a year now. So how can they replace this income? And they replace the income by life insurance.
Life insurance.
Life insurance is how you replace the income. And then Mr. Nerd talked about it as well, leaving your family a leg up as well, giving them a better chance, not leaving them in the same financial situation or worse financial situation than they were before. So the main purpose, I like to say, for life insurance is just making sure that you take care of your responsibilities even in the grave. So making sure your family is still well taken care of, making sure that your burial expenses are taken care of, and that not leaving just an emotional burden, but making sure you don't leave that financial burden behind as well.
He mentioned that insurance is on the closing wealth gap and inheritance. So this will almost kill two birds with one stone.
Absolutely.
What are the different types of life insurance?
That's an excellent question. It's two types. They come in basically two categories. So you have what we call term insurance and what we have cash value insurance. So basically term insurance works just like your auto insurance, homeowner insurance. It's for a period of time. It covers you for a certain period of time. Most of the time it's from 10 years to 35 years in most cases. And then you also have what we call the cash value, or sometimes it's called permanent insurance as well. And basically what this is life insurance, and it's mixed together with some type of savings feature, whether it's some type of some type of like investment included in it, or just a savings account that's earning a certain interest rate, but it's bundled together. So you can't really change one without affecting the other. So you got term insurance, which is just pure death benefit, what you'll leave behind for your family. And then you have cash value, which is the savings and life insurance bundled together. And I make sure I try to say it's a bundle package. So those are the two types of life insurance in a nutshell.
So would that be called universal life?
Yes. So it's three types of cash value insurance. So you got universal life, variable life, and whole life. All of those fall under that cash value umbrella. And then in term, you have three types. You got annual renewable term, which basically means every year your life insurance renews. So the price of life insurance usually goes up over time. Then you have what we call decreasing term insurance, which basically means you pay a certain premium for a certain period of time, but the death benefit goes down over that period of time.
Ah,
And then you have what we call level term insurance, which is basically you pay a certain price for a period of time, and that also that death benefit stays the same as well.
So much information, so
It
many
is a
different
lot.
tiers and levels. Oh, how do I make sense of it all?
Well, hopefully I can help a little bit more as we go on too.
Great,
how much
great.
is enough?
How much is enough? So it's two types. It's two ways we could kind of dictate how much is enough life insurance. But most of life insurance experts say do about 7 to 10 times of your annual income, your gross
Ooh,
annual
that's
income.
that's a good one, Diva.
Yeah,
7 to 10 times.
exactly. 7 to 10 times your annual income. That's the easiest way to do it. But then there's also a more tailored way to each person's situation, which we call the DIME method. So basically it's an acronym. So the D stands for death and debt. So you take up all the debt that you have and then how much you would like to leave behind for your burial expenses. And that will take care of the D. So you might say, you know what, between my debt and death, I want to leave $40,000 behind for that. So then you put that in the D section. Then you got the I, which is the income. So now we get into that 7 to 10 times your annual income. So what we do is in the I section, if you make $40,000, we say 10 times that, we'll put 400,000 for
Okay.
the I part. Then the M stands for mortgage. So if you own a home, and especially, you know, if you got a significant other, you want to try to, if you can and you can afford it, you want to try to take care of paying off that mortgage if possible. So the M stands for mortgage. How much do you owe on your house? And so we put that in the mortgage section. And then the last part is E, which is the education. How much do you want to leave behind for your children's education? We total all of that up, and then that's the recommended amount we would say you need to have in coverage. Some of these things are negotiable. You might say, hey, you know what? My kid's super smart. I think they're gonna have some scholarship. Instead of 40,000, we might only want to do 20,000 for that. We're gonna push for those scholarships. You know, so that's a negotiable. So what we do is we get that number, we start giving quotes, and then based on that person's budget, we try to adjust certain aspects of that to get it within their budget.
I can see a listener or a viewer saying, okay, if I take that DIME model and I add up everything, that's a lot of money. How am I going to afford a policy or a premium if the monthly amount ends up being $200?
This is where the experts come in. And this is why a lot of the experts in the industry suggest term insurance. And the reason we suggest term insurance, including myself as well, is because term insurance is cheaper than the cash value type of policy. And the reason why is it's not permanent insurance. It's not covered for the rest of your life. It's for a particular period of your time. And this kind of segue into an important theory that I like to share with a lot of the clients, which is called the theory of decreasing responsibility. And this is a major theory that a lot of people don't know about, never really heard of, but it talks about why term insurance for a lot of people is the best way to go. And how the theory of decreasing responsibility works is in your earlier years, you more than likely you need a larger amount of life insurance set aside. So you need more life insurance. But the thing is, you might not have a lot of money to be able to afford the life insurance. So with the term policy, it says, it basically gives you time. You're playing defense, right? So now it's saying, okay, let me get a term policy for 25 years. Let me get a term policy for 35 years. So, you know, customize it to what your needs are. And then with the term policy, you get more coverage for less cost. And then the other thing is I try to educate people about investing, and the nerd did a great job of talking about entry-level investing as well. I'm not gonna get too deep into that. I'm here for life insurance, but that's a very important aspect of the life insurance part, because what the cash value policy what they try to do is they try to help you save and do your life insurance all together at once. But if anybody does have a cash value policy, the three we talked about, whole life, universal life, variable life, if they do, make sure you go back to your representative and make sure you get a really good understanding of how that policy works, because it's a lot of ins and outs and a lot of things that unfortunately a lot of agents don't really talk about, because most agents make a lot more money selling those type of policies than the term policies. And make sure you get a good understanding of how your cash value works, if it has the paid up feature, how that works. And then also a great question to ask with a lot of these savings features is, if I need my money that I put into this policy,
Can I pull it out?
can I pull it out? And not just can I pull it out, but how does that process work? A lot of these things with these cash value policies, you could take the money that you invested in it, you could take it out. But what they say is you can borrow it. They say you could borrow it. Now, if anybody knows, whenever you borrow something,
Got to pay it back.
you got to pay it back, but you got to pay it back with what?
Interest.
You got to pay it back with interest.
Yeah.
So it's good to make sure you got a good understanding of how the policy works. What happens to my cash value at death? A lot of people never thought about that question. A lot of people assume if I pass away, my significant other or whoever my beneficiary is, they'll just get that benefit and they'll get my cash value. Make sure you read your contract carefully. A lot of it doesn't really work that way in a lot of these policies.
Gotta watch them.
So you make sure you go back to the person that you had your policy through, get a good understanding of it. I'm also here as well. I make sure I give my information at the end. One of the big things I do is I help people go through their policies, make sure they got a good understanding of what they have, and then see if it's an area where I can help improve in that situation.
All right. Any
Nice.
questions?
My head is just, it's just so much. I feel like we might need you to come back for a part 2. It's just
Will.
so much information, but it's good stuff. And I know that you wanted to speak more in generalities, but I feel that the people may want more fine details to help make informed decisions. So everything that you've just shared was awesome and amazing, and it was easy to follow. But I'd love to see you come back if you have some bandwidth and some time at some point for us to do perhaps a part 2 and have some follow-up questions.
Good stuff. Good stuff, Diva. Good stuff. And make sure subscribe. And we're gonna. And if you want Mr. DeBerry to come back, put it in the comment.
Ask me
Tell
back,
you what,
please.
more DeBerry.
Yes.
More DeBerry. More DeBerry. More DeBerry.
You want those details, have me back on. We'll get into
Get
Yeah.
DeBerry back. DeBerry back.
it.
It's so much information to digest, but it's all great stuff. I really do feel like we need a part 2. So please comment if you want more information so that you can make informed decisions about getting life insurance for the benefit and protection of your family. Please let us know in the comments below. All right. Thank you so incredibly much, Mr. DeBerry. I really appreciate you taking the time to come and hang out with us on the Fashion and Finance Show. What's the final word, Mr. Nerd?
Hey, roll the dough. Roll the dough. Roll the dough. Roll the dough. Close that wealth gap.
Absolutely.
We're going to help you close that wealth gap. Okay? All
And
right.
help you to look good while doing it. Thank you so much
baby.
for joining the Fashion and Finance Show. Until we see you again. Bye-bye.
Bye, Diva.
Bye, Mr. Nerd. Bye, Mr. DeBerry.
All right. Thank you for having me.